Hello, everyone. Welcome to today's webinar, COVID-19, a country overview of the impact for business. Today's webinar is obviously about the rapidly evolving situation around the coronavirus pandemic at the moment. And we've put together this webinar to address a couple of questions on what the response has been so far across a number of key countries, what kind of support there is in place for businesses, and what the impact is on especially cross-border businesses in the current situation. On the webinar today, I would like to welcome our speakers from a number of countries. And Axel, if I may start with you, could you briefly introduce yourself?
Yes, thank you, Leslie. My name is Axel van Schendel. I'm partner at HLB, the Netherlands, and working for the business department, business advisory, and today representing HLB, the Netherlands.
Hello, good afternoon, everyone. My name is Borja Hermida. I represent HLB Spain, and I'm working for the tax department in HLB Spain.
And Dave Springsteen calling in from the USA, HLB USA, calling in as HLB's global tax leader. Be safe.
Thanks, Dave.
Good afternoon, everyone. I'm Eugenio Tarabini from HLB Italy. I'm working in Studio Perozza and Partners in Milan, and I'm expert in tax.
Good afternoon, everyone. Laurent Capbern. I'm based in Paris. I am a French CPA, and take care of you.
Good afternoon from Germany. My name is Lutz Meyer. I'm here for HLB Germany. I'm a senior tax partner in my firm, and welcome you to this webinar.
And finally, good afternoon from me. My name is Nick Farmer, international tax partner at Menzies in the UK, and I'll be representing HLB UK.
Yes, thank you, everyone. And my name is Leslie Hornoon, and I will be moderating the webinar today. Gentlemen, thank you very much for joining. Before we get into it, just wanted to ask you all how you are doing in these strange times.
Well, from the US, we're always looking for the brighter side, and there's some great cartoons that are going around in spite of this virus going global. But we are doing okay in the US and fortunate enough to learn from other countries right now. So hopefully we listen.
Well, yes, from Germany. Germany is also doing well. Also, this situation is combined with personal restrictions and personal movements at the moment. So it's a totally different life we are currently facing, from the older people up to the pupils, no school, etc. So it's strange, but we'll manage it.
Yeah, yes, from an Italian perspective, actually we are probably the most impacted ones and by the COVID-19. But as a HLB Italy, we are doing very well and working remotely, of course. But we hope, of course, that the thing will change very quickly.
Hello, well, from Spain, well, the state of alarm was declared for the government on 14th of March, and the situation is not easy because there is really big problems with the health system. But fortunately, we are well, and there is no problem in the healthy point of view here in the firm.
Yeah.
Leslie, HLB, the Netherlands, Axel speaking here. We're doing fine personally. Of course, it are scary times, but well, our employers are doing fine.
Great,
in
good.
France, it's clearly an unusual situation for sure, but we try to stay as much as positive possible, and we do our best to spend a lot of time with all our clients to assist.
Yes.
Yeah, and just mentioning from the UK side of things, obviously it's incredibly fast-moving situation, but in a bizarre sort of way, I think we're missing Brexit right now. I think we'd all go back to those times.
Yes, I agree with that. I'd rather have Brexit in the news. I'm glad to hear you're all optimistic and positive.
Yeah, just from Germany, a big thank you to all the staff working in hospitals, taking care of all the people who need help.
Absolutely. I think we can echo that across all the countries.
Yeah, I agree totally with the German representative. I think that is the true heroes of this crisis.
I fully agree.
Okay, well, thank you again for being here today. For all of you on the webinar, I can see that we have we're close to 150 people at the moment. If you have any questions about the topics that we're discussing today, please feel free to use the Q&A box or the chat box on the right-hand side of your screen, I believe it is, and post your questions there. Towards the end of the webinar, we will have some time to respond to your questions. So to set the scene, I think well, some has already been said, of course, in our introduction, but as we know, these are difficult times across the world. There's a lot of disruption to business activities, steep decline in consumer confidence. The stock markets have dropped, of course, and the number of coronavirus cases is increasing, and it's changing by the hour at the moment. But I mean, while the current outlook is gloomy, I think it is also very important to keep a positive outlook and remember that in recessions and difficult times before, markets have bounced back and we've come back stronger. So that, I hope, will very much also be the message that we echo through the webinar today. So as we go into it, may I ask, what has been the response of the governments in your country so far? Axel, maybe I can start with you.
Yes, of course, Leslie. The Dutch government came out with a massive support package of 20 billions of euros for the upcoming 3 months. And actually, it consists of 4 measures: postponement of tax payments and reduction of fines, setting up a sort of emergency desk. And they came out with the 3rd measure is additional support for self-employed persons without employees. And there was this employment bridging emergency fund. Those are the 4 measures the Dutch government came out with, and I will introduce them and explain them later on more in detail.
Thank you.
Just picking up on it, if you like, from a UK perspective, Leslie, you know, obviously there's a lot that is being announced right now. So new measures are sort of coming in every day. And I think one of the things as advisors is it's quite difficult to keep on top of that. So measures may get announced, but there isn't always the detail behind it. But our government is throwing an unprecedented amount of money at the economy to try and keep it moving forward. So as we go through the slides, we'll pick up on the funding measures that have been announced for business, the different tax measures to help companies through this period and not have to maintain their tax payments, as well as what are being done for employees and self-employed people. So there's quite a comprehensive package of measures here that have been announced, and as I say, new measures are coming on and details are being sort of provided to back them up, but they're not always there, and you know, there's a little bit of difficulty in giving businesses the comprehensive advice they need right now.
Yeah, in Spain, follow the declaration of state of alarm. The Spanish government approved a royal decree law where approved an initial package of measures aimed to protecting and securing the Spanish economy. That it's amount about 200,000 millions of euros, and includes measures for employment and taxes and funding measures in order to reactivate the economy.
Yes, and from an Italian perspective.
And in the U.S., it's quite interesting to stave off the financial virus that's coming on quickly and the unemployment. There's $2 trillion plus dedicated to workers, direct checks to workers, loans, incentives, which we'll get into. But unfortunately, politics has gotten in the way. And one of the largest incentive bills that we have is still bouncing around because some of the politicians are trying to put special incentives for not-for-profit entities or their own special interests. And so once again, the U.S. has made something so essential, so important, a real show.
And yes, from an Italian perspective, I have to say that the Italian government started immediately doing issuing law decrees as from the middle of February, and impacting different areas of our businesses and non-businesses aspects. Of course, only one which has been issued at the middle of March provided further measures, a lot of measures for supporting the economy, the Italian economy, from a tax, accounting, and laboristic perspective. And but of course, these are only short-term instruments, because they are communicating us that they will introduce new measure and through law decrees probably at the beginning of April in order to further tackle this economic crisis.
Good. Shall we go into the specific areas? So, for example, cash flow is one of the first concerns for business leaders mitigating the impact of the COVID-19 crisis. I know there's a lot of funding measures that are being put in place. Maybe Franz, if you would like to start.
Yes, Leslie. Yes, as my colleagues said before, in France, we had very strong and very quick decision. For example, as an example, today it's quite easy in France to reschedule bank credits. It's easy also from this morning to get a new short-term loan for the equivalent of 3 months of turnover. This is a decision of this morning, and also for small companies, it's possible to postpone the payment of water, of gas, of electricity, and we are in discussion with the landlords for the land. So, as I see in many countries, in most of the countries, strong decisions were taken from the last weeks. But I wanted to draw the attention of everyone on the fact that what also is very important is that companies that have cash flow enough should keep on paying their suppliers. Mm-hmm. If companies that have enough cash flow stop to pay their suppliers, we will have a big issue. So if you can pay, you have to keep on paying your suppliers. And also, we as advisors, we don't have to pay to invoice additional amounts to our clients due to the situation. Of course, this is something very important.
Okay, going on for Germany. So Germany made a bundle of 1.3 trillion euros in order to support the German business, because we are very concerned about the situation. As anybody knows, Germany is an export country, so is depending on the economic strength and economic power of the customers all over the world. And so, of course, this hits us very much, what happens at the moment, because all the supply chains have broken down. And so the German federal state has set up a lot of measures in order to support businesses, in order to keep up their liquidity by having loans at, let's say, whatever it takes. So they have no limit set up. So if a company needs to have some loan for improved liquidity, it's quite easy to get this, because Germany, as a federal state, takes over between 80 and 90% of the liability of such a loan then. So the individual business does not need to prove some securities, something else. That's one of the main measures they have. And in addition, the German federal state grants subsidies to small entrepreneurs and small business, so non-repayable amounts, especially to, let's say, be in the position to keep on rents on their business rooms, etc., so that they don't have to face cancelled rental contracts, etc. That's one of the main tracks German is in terms of business, in order to keep up the liquidity and helping businesses to going on.
So that's quite interesting to hear that from a UK perspective, because certainly we have something similar here. We have a scheme known as the Business Interruption Loan Scheme. It's one of the main facilities that the government is offering, and you mentioned there that it was your government was guaranteeing the loans, and in this sense our government is also providing an 80% guarantee on these loans. But actually these loans are only available to small and medium-sized companies, those which have less than a 45 million turnover, and the funding is up to 5 million. So this scheme is live now, so companies can apply for this. And really they still have to go through usual sort of funding measures. So they need to apply to a bank, and if they're able to show that they're a good business and they're just experiencing this disruption due to the current circumstances and not able to sort of trade through it, then the bank will look at their financials, cash flows, management accounts, etc., and based on those, and if the business looks sort of viable, with that 80% guarantee coming from government, they should be able to lend under that scheme. So, but that, as I say, is only for businesses with turnover up to 45 million. We then have another scheme, but it's actually probably at the other end of the spectrum, which is looking at very big businesses and making sure there's some sort of liquidity in these larger firms. And this is one which the Bank of England is involved in, where they're sort of buying short-term debt from companies. But these businesses need to be making a material contribution to the economy. They need to be employing a significant amount of people, generating a significant amount of revenue in the UK, and they're probably the sort of businesses that would be known to people, and they have sort of credit ratings applied to them. So we have these two main schemes, which are loan schemes. They're not grant schemes, so businesses are having to loan this money and need to actually pay it back at some point in the future. But there's a gap between those two schemes that may mean that some businesses aren't sort of eligible for either of them, and we're starting to see those sort of issues come as well.
Nick, if I may ask, there is a question coming in via the chat, which I think is specific to what you were just saying. And the question is, I assume there is an interest rate to pay on these loans. Do you have any idea what the level is?
Well, certainly for the first 12 months, the government will pay the interest and the fees associated with it. So that's, again, one of the advantages of getting a loan under this particular scheme, that that first 12 months, the cash flow on any interest and the fees will be covered by the government. Then the actual terms, in terms of the interest, is obviously set by the lender themselves, and there's 40 different lenders that are actually involved in this scheme. Most people would go initially to their bank and approach their bank, and it may be that their bank doesn't immediately put them into this scheme. They're only going into this scheme if they wouldn't lend outside of this scheme. So there's definitely a high level of communication required with the bank, and the scheme is appropriate to them, and then obviously going through and understanding the terms of that borrowing.
Yeah, in Spain it's just really similar to in England. The Spanish government will grant 100,000 million euros in new lines of state guarantees, not fund, it's guarantees. and for the renewal of loans and new financing that is granted by the financing entities. That probably will allow the management of invoice, cover liquidity needs, and facilitate the maintenance of jobs. No, and also the institute, the official credit institute, is provided with an additional 10,000 million euros to provide liquidity to the companies, and also for exporting companies, there is an additional state guarantees have been approved, 2,000 million euros. And now in Spain, we are working really hard with really closing with our companies and with the banks and with these states warranty institutions in order to prepare all the documentation that's required to have access for these fundings, no? And that is a really hard work and intensive work.
So well, Leslie,
go ahead, Dave.
No. So Leslie, cash is king, very important title to this slide. And what we're recommending to our clients and our individual friends and family members is to do a doomsday cash flow analysis. You know, after they look at their costs, how many months, how many weeks can they survive with the cash flow reserves they currently have? Then when you look at what's caused all this cash flow problems, it's because the governments have shut down, stay at home, closed businesses, have caused this reaction to the COVID-19. So it's very interesting that each country that's already discussed these loans and subsidiaries and banking policies and foreign investments have all similar policies in place. I would add to what Nick said about the small business loans. In the US, with the interest of retaining employment, making sure people don't get terminated, even though it's happening, loans will be forgiven if they have the same number of employees as they entered into this dark side, and when they come out of the dark side later on, those loans will be forgiven. So I think there is twists to all these incentives the government's providing. Again, I think then what's happening to keep the economy alive, certain banks are waiving certain bank covenants, so borrowers don't go into default. Some banks are actually requiring people not to pay the bank for several months. Landlords are saying also, here's a 30-day, 60-day holiday, don't pay your rent. So while cash is king to go through the economies, even cross-border, more importantly, we're all working together. We're in this together to survive, so everybody survives. So it is kind of interesting where COVID-19 has created such a financial challenge to us all. Once again, humans will be very creative and survive this for sure.
Yeah, thank you, David. This is very, very interesting, even from an Italian perspective, because and within the measures introduced by the Italian government, there is also a suspension until the 30th of September 2020 of the loan tranches and the non-installment loans repayment from banks and financial institutions granted to the small medium enterprises. And speaking about the big enterprises that were forced to lock down and to close their production, there is an exceptional guarantee of the layoffs found, the layoff fund, and to cover this suspension and reduction of work. But again, as I said before, from an Italian perspective, these are actions that can help the company survive only for a short term. So the horizon is only 6 months, and we expect Italian governments to make further actions in that respect.
Okay, thank you, Eugenio.
Oh.
Well, also in the Netherlands, there is a generous banking policy at this moment. In addition to the Dutch government extensive support package, they came up with joint measures to give our customers breathing room, and which consists of a 6-month grace period on their current loans, and some banks only give a grace period on the repayments, and some banks on the repayments and the interest. So that's the first measure. And then there are new on new loans. There are three different kind of loans. For the very small businesses, we have credits. They come up with microcredits up to 50,000 euros. And we have the mid segment, the SME segment, which grants loans up until 1.5 million. This is called the temporary expansion MKB scheme. And the last one is from loans up to 1.5 million and further. And all loans are under government guaranteed scheme. So there is a grace period on existing loans, and there are three new kinds of loans which are, well, let's say, government guaranteed.
Thank you, Axel. I'm getting a couple of questions in via the chat, and they're also a good bridge to our next slide, actually. And they are about tax exemptions. And specifically, I have a question here. I know there are tax exemptions in the USA and Italy, but what about Spain and Germany? So maybe, Lutz, if you want to start with Germany.
Yeah, sure, no problem at all. Germany, the German tax ministry has granted a deferment of paying taxes up to the end of the year if the problem to pay taxes was caused by the situation COVID-19. Of course, if a company has been in trouble before that situation came up, then it's a bit difficult to get a tax deferment and tax payments. So you can ask for personal income tax as well as for corporate income tax, trade tax, and especially also VAT, to ask for a deferment of paying those taxes by the end of the year at the first step. And also no enforcement measures will be taken from the German tax authorities. So if there was already a delay in tax payments, and if the authorities ask you to pay and set up enforcement measures, also these enforcement measures will not be taken at least until the end of the year. So also no interests will be charged for delayed payments or whatever. So also German Ministry of Finance sees that it would have an impact on liquidity in terms of having the duty to pay taxes without any income at the moment.
Yeah, well, in Spain, the government was about some tax measures. That it's important to say that this measure remain, but only during the time that the state of alarm is in effect. This measure, in general terms, is suspension of the tax judicial and administrative proceeding terms until during the time that the state of alarm is in effect, suspension of the tax statute limitation period, extension of the certain tax deadlines, and also it's approved deferral in payment of taxes in VAT, corporate tax, also tax withholdings and excess tax. But it's only applied, this deferral in the payment of the taxes only apply for a small size company, less than 6 million euros turnover in 2019. So this measure is not applied to the medium and the big companies. And also is limited only for, you can deferral tax payments only for 30,000 euros. And the deferral is for a period of 6 months. That is without interest for the first 3 months.
Leslie, in France, it's quite the same. Quick, strong decision from the French tax administration. It's possible to postpone the payments of taxes, not VAT, but other taxes can be postponed. The payment can be postponed, and social charges also. And it's also possible to accelerate the refund of the amount that are due by the French tax administration. The good news in this situation is that we see that when they really want, the tax administration that can take quick decision. Usually it takes months and months to get decisions, and here in our situation they did very quickly. So this is the good news.
And Laurent, that was quite interesting to hear, because I think you said that VAT is something that hasn't been suspended in terms of payment. In the UK, that tax has been, so there'll be no payment of VAT due between now and the end of June, and then any sort of tax that was due over that period won't actually be due for payment until April next year, and that applies to all businesses, and it's automatic. So VAT is one of the taxes here on which our government has acted, and I think in an overall sense our government is very sympathetic around the payment of taxes, because as you mentioned, Laurent, actually earlier, the key thing that they're looking for is people to continue to pay their staff and to pay their suppliers. And they're prepared to sort of waive the payment of taxes. So businesses can generally get a 3-month deferment of the payment of all taxes. So if they need help and they rung up our tax authority, they will get a deferment on all tax obligations for the next 3 months, and then after that period they'll probably have to enter into an arrangement plan to pay the taxes, and there's a waiving of all interest and penalties over that period as well. And just talking about the self-employed individuals, anybody dealing with income tax, there would have been a payment that would have been due at the end of July this year, and that has now been deferred until the end of January next year. So a lot of payments are being pushed down the line that would have been expected to be made over the next short period of time. But I think the key thing from a UK perspective is that if anybody is having difficulties with their tax payment, is to communicate that to the tax authority, because there are these measures that are available to them to help them manage their cash flow.
Yeah, this is more or less the same as what happened in Italy, and the government actually granted a postponement for certain tax payment, but especially for the VAT payments, but unfortunately only for certain category of taxpayer, in particular the ones that are more affected by the COVID-19 crisis. For example, enterprises working in a business like tourism, catering, and sports, and transport also, and especially taxpayers that are having a legal seat in the so-called red zone, which is the area close to Milan in the north of Italy. For this kind of taxpayer, the government put in place further measure, and one of these is the postponement of the VAT payment for March, April, and May. It will be postponed in June.
Well, in the Netherlands, it's very similar. The Dutch tax authority allows to special deferral of payment, and this applies to all assessments of income tax, corporate tax, VAT, and payroll taxes. And also, you get a waiver, just as in the UK, on fines. So there are no fines over the mentioned tax.
I guess in the US, we have a very unique situation, or maybe it's not so unique. We've got 50 states. And so while we're waiting for this $2 trillion package to be signed off by the federal government to get it out of the political hands, yes, we have extended filing dates. Yes, we have extended payment dates. But guess what? Many states are not following the government rules or recommendations and law. So while we have a delay for federal purposes, we still have to file state returns in many, many, many states. And how do we do the state returns? You got to file the federal return. So from a delay standpoint, we are business as usual in the US, essential service, and we are allowed to go to the office to take care of been deferred, some states not. So again, we've got multiple filing issues to deal with. And the biggest concern is the states. The budget of the states are not as rich as the federal government. The states don't print money. And so we may see a lot of states, even though it's not allowed, starving for funds from the federal government. So it is this financial crisis that is big. While we need to get our people healthy and back into the market, Trump is talking about opening certain segments of the US because they're not impacted by COVID-19. So it's going to be interesting on how they contain this virus. I know this is not the tax measures, but taxes, I think, drive recovery to economies, tax policy, as we talked about. So at the end of the day, taxes will be important. Getting back to business is important. And the last thing, politics are really getting in the way here in the U.S. It's been proposed that individual taxpayers get a check directly from the federal government to cover their day-to-day living expenses. The biggest debate now is the government is afraid that some individuals will get more by this government handout than they do working day-to-day, and people will quit their jobs. So it is quite interesting when you look behind all these policies, all this funding, all these tax measures, what's actually happening behind the scenes. So it is entertaining, but sad.
And Dave, you raised a couple of interesting things there, because in a similar fashion in the UK, although the actual payments are allowed to be deferred, the compliance still continues. So the tax authority will still be expecting the returns to be filed so that they understand what taxes are actually being deferred. So there's still the obligation on companies to make sure they know what their tax would be across this period, and they're reporting that even if the payment itself is being delayed.
Yes, and for Germany, there's one important hint the German tax authorities made. Of course, all this support for the businesses and taxpayers is only allowed to make use of if they really suffer under the situation of COVID-19. So if there should be a business who wants to make or to achieve an advantage from that, all the supporting measures, without being in a bad situation, the German tax authorities make clear that they will strongly follow this up in order to make sure that only those businesses can make use of all these measures who really have an impact of COVID-19. This goes up to the comment that they would take this as a case of tax evasion if some business should ask for a deferment of tax payments if they are fully in a good business situation, because we still have some branches, of course, who still earn money, and those cannot make use of tax deferments, etc.
I think, Louis, that this is the key issue, because at the moment, probably the government, they started put in place this measure just to making surviving companies generally for a short-term period. And I think in the following weeks, in the following months, they would see probably strategic and focused actions by each government to help specific businesses that actually need a support.
Yeah, and there's still a lot of us. Oh, go ahead, Leslie. Sorry.
Oh, I was going to say, I have a couple of tax-related questions coming in. Dave, do you want to go first, or shall I go to the questions?
Throw the question up there, and then we'll jump on the answer.
Okay, great. So first question is for Axel about the situation in the Netherlands. The question is, does the government also give extensions of due payments on tariffs? We have a license for a toll-free warehouse.
Well, that's a very specific question. I don't know exactly the answer on that specific question, so I suggest, Leslie, you put it in our general box, and I put it through.
We come back by email.
Yes, we do.
Okay, great. Another question. Do you think governments have enough thought through how companies will pay back taxes and emergency loans once we come out of the crisis? Surely SMEs in particular will have real issues with payments if the crisis is prolonged. I think that goes back to what you were saying earlier.
Leslie, this question is for me?
In general,
In general, okay.
Particular country, yes. Nick, do you want to take this one?
Yeah, I think that will be an issue. Obviously, it's the point that Lutz made that really, this deferment of taxes is only for businesses that are, suffering a short-term disruption in their business or finding it difficult to trade at the moment. Obviously, when we come out the other side, what payments are due and whether those businesses are able to meet them. As I mentioned, in the UK, our government is saying that businesses, all taxes are effectively able to be deferred for up to 3 months if that's agreed with the tax authority. And then after that, a specific payment plan will be put in place. So at that point, businesses who've had that deferment will be able to discuss with the tax authority actually a specific payment plan based on their circumstances, and that often is a case of showing what your financial position is and what your forecast for the future, so that they can agree something that's suitable for your circumstances.
So from Germany, the position on this is that the politicians have asked all the people working on the tax authorities, etc., to show a very cooperative behavior, let's say, and that's what we also what our experience is. Even the superiors, the supervisors of the tax authorities send around letters and say, okay, we know about the situation of your clients. Let's keep it simple. Let's discuss things on phone rather than writing letters. So I think this special situation also will continue if the situation hopefully will improve soon, that even then the tax authorities and also the other authorities will have a very cooperative way of dealing with things.
Thank you, Lutz. I have a couple more questions. Just for the interest of time, let's try and do 2 more questions and then move to the next topic, and we can come back to tax-related questions at the end if we have enough time. So here I have a question about UK VAT. The question is, I guess we still need to file VAT even if not payable. What about direct debit payments from HMRC? Will they stop this VAT being taken automatically, or does the company have to stop it?
I did read that the company needs to stop the payments if they are sort of paying on debit. And then, of course, there won't be any payments expected over this period of time until the 30th of June. But the VAT returns, as mentioned there, we expect should still be filed. And then, based on those VAT returns, the VAT that was due across this period to the 30th of June would actually need to be paid by April 2021.
Thank you, Nick. Shall we, for now, move to the next slides? And we have a lot of questions coming in. This is really great. Keep your questions going. If we run out of time and not able to answer your question during the webinar, we will get back to you via email and make sure that we answer your questions. So the impact of the coronavirus, obviously, it is a very uncertain time for employers and employees alike. A lot of people worry about job retention, sick leave, people with 0-hour contracts, you name it. I guess, Dave, maybe I can start with you. What is the US perspective on this? I think we've lost Dave for a moment. May I ask Borja, Spain, what is your input?
Yeah, Leslie. Yeah, well, the Spanish government has approved some measures related with the climate and in order to flexibility the workforce. And so one of the measures that's really important measures is that the companies that could ask for the suspension of the labor activity, and that is something implied that the companies could stop the workers' salaries, and that is a special procedure that the companies is going to ask. And this suspension of the labor activity could be total or partial, and that implies that the company stop the pay of the salaries of the employees, and the employees receive an employment benefit from the state. The state pay their salaries. That's only companies that are could ask for these benefits. That's only that companies is direct effective for the COVID outbreak or indirect effective. So other measure is the company that is getting for this suspension of labor activity is that they have an exception for the social contributions for the 100% if you have less than 50 employees, and the companies that have more than 15 employees that have around 75% of this. I think that's really an interesting measure that most of the company is requesting in actually here in Spain.
Yeah, so Leslie, back to the US, clearly all the incentives are about staying in business and keeping jobs. So in our proposed bills, there are tax credits, which is a dollar for dollar offset. And one is for a payroll tax credit where employees are allowed up to 80 hours to deal with any COVID-19 issues out there. If you're self-employed, you get an income tax credit. And it also goes as far as taking care of family and friends, that there are credits when one has to deal with issues that they've never faced before with family, direct or indirect family. So again, it's about keeping the workforce in place. But I think the most important thing about this slide, employers, employees, is the remote workforce. While, like I said, we are an essential service as accountants, and can go to the office, we are telling our staff, work at home, stay in touch, communicate, create new social channels, do the best you can with working and living with your family at the same time. And so we have gone out of our way to create policies and work with our staff so they are happy and remain with us throughout this crisis.
Yeah, speaking about Italy quickly, and besides what I said before, the so-called layoff fund, so basically the possibility of the company to use part of the government funds to pay the employees. There are other measures put in place. Of course, there are lots of measures that encourage the home-based working. So, for example, for the months of March, April, and May, it will be possible to work from home even without a trade union agreement, and it's possible to work from home without any written agreement with employers, even for people with health diseases or with a relative having health diseases. And the Italian companies also have to pay an extraordinary bonus on the monthly salary of their employee of 100 euro, and the government, in addition, recognize a parental leave up to 15 days for the month of March for people having children with less 12 years old. And there is also a recognition of a bonus for babysitting services of 600 euros. So, as they've said before, even in Italy, our government is doing their best to keep the employees with their work.
Well, in Germany, I can say that we have, let's say, 3 measures, and one of them also helped us through financial crisis very well in the past. So if this time here it's the workload in a company gets reduced by 10% or more, then the job center, the federal job center, takes over up to between 60 and 67% of the last net wage of the workers. We call it, let's say, short-time work, so that not the employer, but the federal job center takes over the wages, which makes it very much easier for the employers to keep the staff employed by not having to pay all the wages by themselves. Another point is that what is quite exceptional in Germany, even the social security contributions can be deferred. So also this does not have to be paid currently now by the employers and by the businesses, but can also be shifted to later time. And yes, finally, employees can ask for a non-repayable subsidy to their personal wage under certain circumstances, especially if they have children, so that they still are in the position to pay rents and yes, like invoices for personal belongings and personal stuff like power, gas, etc., so that also private individuals do not have to suffer too much by the current situation.
That's quite interesting to hear about the sort of measures that your government are taking around job retention, because that's certainly a big aspect that our government have also focused in, and they've introduced a new job retention scheme, which is actually quite detailed in the way it works, but it is eligible. All businesses are eligible for this, and it's really where they would be making staff redundant if they were unable to pay their staff. The government will step in if those redundancies would be unavoidable. And what the government are effectively doing is they are reimbursing up to 80% of the wage cost, up to a maximum of £2,500 a month. So it's quite a considerable amount of money, which is potentially going to be borne here by the government. And what the employer needs to do is they need to actually identify staff that effectively they don't have work for across this period, and they need to treat those in a sort of technical term as a furloughed worker, somebody who they don't have work for but they want to retain. It's just because of this period of time that they're unable to offer them work and pay them. That, of course, in making the decision on who should be put onto that scheme, an employer has to look quite carefully at employment law and negotiate this with employees. And there may be issues where there are teams of people and they have work for some of the team but not all of the team, which employees they actually select to be categorized as furloughed workers and which ones they don't. So there's actually going to be quite a lot of legal issues here that employers may need to work through in order to actually apply this job retention scheme. Looking at the slide there, it also does actually cover 0-hour employees. And I think the feeling there is that because they may not be on or won't be on such a consistent payment as full-time employees, that they'll have to look at smoothing that calculation across a period of time to see what that individual's earnings were likely to be. And I think a 12-week period is something that I've heard suggested that you'd look across for 0-hour employees. So employees who would otherwise lose their job potentially get protected through this job retention scheme. We should be getting some announcements later today to do with self-employed individuals. The government are saying that they're looking to treat them on an equal footing to employees and to match the way that they're being dealt with. Sick leave is also something which, if somebody is sick due to COVID-19, then statutory sick pay, up to 2 weeks of it, will be covered again by the government. So I think there's quite a comprehensive package of measures here, and this is certainly an area which us as a business are talking a lot to employers about at the moment, and trying to interpret some of the rules here, because there isn't necessarily comprehensive guidance about exactly how employees deal with this job retention scheme, which is now in place, although the actual funds for that haven't actually yet been made available. So there's a scheme there, but actually funds haven't really started flowing from it yet.
Nick, a quick question from the audience. Is that on net pay or gross pay?
So it's up to 80% of the wage cost of that individual, but it's capped out at £2,500 a month. So the calculation you'd have to sort of work through on a sort of a payroll basis, but you know, that's something which, if you put it into the system, should be, well, once payrolls are configured for it, should be something that will be calculated.
Thank you. Just for the interest of time, we have about 5 minutes towards the end of the webinar, and I feel like there is a lot more that we could potentially cover. Just to take an international perspective for a second, from each of your countries and maybe from experience working with your international clients, what is the best advice that you can give businesses and individuals who have cross-border activity?
Two comments from my side, Leslie. The first one is that you need local advices. You need the good information by the good person, and you need local advices in the current situation. An additional comment is we are all working remotely. This is an unusual situation. And from what I understand, we have a potential risk of cyber IT attack. So we have to take care of that, and we have to inform our employees to take care with emails we receive, in particular if we do cross-border business with emails from abroad.
That's a good point. Thank you, Laurent. Any of the others?
Yes.
Yeah, from a US.
Go, David. Go, Dave.
And I'm just saying, from a U.S. perspective, tax planning, cross-border tax planning has slowed down a little bit. But we tell our clients that they should be really focused on incentives if they got subsidiaries in other countries on all the benefits that are being provided. But what we're seeing is a lot of people are now focused in sourcing of their raw materials, sourcing of their labor. So that's become more important, because there is a prediction out there by McKinsey that a lot of industries will be out of inventory in 2 months, because everyone's focused on production of healthcare items. So it is kind of interesting how CEOs have shifted their focus from international tax planning to more of a resource planning. And then we're finding that cybersecurity is being ignored, but this is a time where cybersecurity is critical. Everyone's vulnerable right now. So it's an important time to cover all areas.
Another point maybe due to cross-border business is stay in touch. Stay in touch with suppliers, stay in touch with customers, stay in touch with advisors, especially also authorities, because in such a situation, everybody is cooperative usually. So don't wait until it's too late, but get up early enough in order to have a sight on what you're doing in order not to, let's say, react too late.
Thank you, Lutz. I think we have about 1 minute left. Thank you all very much. And thank you to everyone who has been posting questions to us. I'm sorry we didn't get to answer all of them, but we will get back to you via email. Considering the amount of content that I think we can still cover, I don't know about our speakers, but we might want to consider a follow-up webinar to go deeper in some of these topics. In the meantime, please go and visit our COVID-19 hub on the HLB website. That is www.hlb.global/COVID-19. Some of the questions coming in have been around, is there an overview from these countries available? Where can I find more information? This is the first place for you to look. There is also the opportunity there to get in contact with us directly and let us know in particular what the countries are that you want to learn more about. And with that, I would like to thank all of our speakers and everyone attending, and stay safe, everyone.
Thank you. All of you.
Thank you.
Thank you, everyone.
Take
Thank
care.
you as well. Thank you.
Take care. Bye-bye.